Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia in collaboration with AmFunds. Today, our webinar title is Aligning Your Portfolio with Purpose, ESG Investing through ETF. So for this webinar, we are very thankful to AmFunds for making it happen. So a huge shout out for AmFunds for arranging the head of investment to come to this session to share their view on this ESG investing through ETF. Now, my name is Shen Zhu. I'm moderator for this webinar. Now, many of us want our money to reflect our values, but it can be very hard to know where to start. So this is where ESG investing comes in. By focusing on companies that can prioritize environmental responsibilities, social impact, and strong governance, you can build a portfolio that's not only resilient, but also aligned with your principles. So in Malaysia, ESG investing is gaining momentum, but many of us are unsure about how do we navigate this evolving landscape. So that's where ETF comes in. So by investing through ETF, we can gain a diversified exposure through companies, especially they are ESG compliant through those ESG compliant ETF. So today we're going to talk about this topic. We've invited Mr. Teh Chi-cheun, who is a head of investment specialist and research of AmFunds mentioned Berhad, to guide us through the key trends and challenges and opportunities and show us how the FTSE4Good Bursa Malaysia Index can enable us to invest in companies that lead the way in ESG. Now, before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed companies that we mentioned here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. Now, he joined AmFunds Management Berhad in March 2025 as Head of Investment Specialist and Research. He has 30 years of experience in the industry, including 20 years in fund management. He plays a key role in managing outward communications of, among others, the firm's abilities, investment views, and products. He is the investment research team that delivers investment recommendations within AmFunds. Prior to joining AmFunds, he was the chief executive of a fund management company in Malaysia. He has extensive investment experience in global multi-asset frameworks, specializing in equities and derivatives. He began his career in Malaysia and has also worked in Singapore and Canada before returning home. He's a chartered financial analyst and holds a bachelor degree in accounting financial analysis from the University of Warwick, England. So he's none other than Mr. Teh Chi-cheun. So Mr. Teh, good evening. How are you today?
Okay, I'm fine, thank you. Thanks, Shane, for the great introduction. Okay.
All right, so we can't wait to learn from you about ESG investing through exchange traded funds. So I'll just hand over the session to you.
Okay, thank you. Sharing my screen here now, and here we are. Okay. Okay. Thank you, Shane, and thank you, thank Bursa for having me here today and to conduct this presentation. And we're looking at ESG investing. Basically, it's a key pathway for sustainable growth and definitely for long-term value creation. It's also part of a larger scope of being responsible in finance and to ensure future sustainable economic success. So we'll go back to basics first, 101, the introduction to ESG. Okay. So basically ESG stands for environment, social, and governance. And I need to emphasize here that this is always an evolving landscape, and he has taken root in a lot of our investment decisions, and things have actually gone deeper and deeper. So in ESG today, we include climate change, carbon emissions, and efficient resource use in business practices. If I want to talk about environment, when I talk about the environment, when I was much younger, we just started with recycling. Then it went to the 3 R's. Okay, so we refuse, okay, reuse and recycle, and now there are 5 R's as well. Okay, so we can actually also repair our stuff. Okay, and then we refuse, reduce, reuse, recycle, and repair. So things have actually evolved over time as well. Social factors as well. Today, the focus is on labor standards, diversity, the community engagement, as well as the human rights, the adherence to human rights within our organizations and even the country. I still remember when I first started my career back in the early mid-90s, it was mainly about CSR. So today, for example, for Bursa listed companies, we need to have diversity on boards, about 30% women directors, for example. So that has also evolved. And governance is about ethics, about board diversity, okay? And basically at the end of the day, it's about transparency and accountability. For listed companies especially, it's like accountability to all stakeholders, okay? So stakeholders not only involve both the majority and minority shareholders, but also those in the society, customers, suppliers, the whole ecosystem actually. So governance is also getting increasingly important. And when people actually or companies actually abide by ESG, okay, this ESG investing actually balances profitability with responsibility. In the longer term, it enhances business value and definitely reduces risk. So how important is it for investors and companies? Firstly, there's always risk mitigation. When investors actually get to mitigate risks, okay, with governance, environment, and social issues that can impact long-term financial stability. Because if you have seen in the US, for example, the asbestos cases that went about, it was running for many years, and people also considering, the class action suits against the tobacco companies. So if all these ESG practices were implemented much earlier, this would not have happened. So it actually creates long-term financial stability for people's investments and for companies' investment decision making. It also unlocks new opportunities because when ESG is taking such prominence and is being regulated and supported by governments, there are a lot of incentives, a lot of rules, and it creates a trend of clean energy, for example. So it creates new opportunities for all of us. And at the end of the day, companies that actually practice ESG generally have lower cost of capital. They have better reputations among the consumers. And of course, within the stakeholder on the G side, especially with minority shareholders, there's basically a lot of trust there and enhances the resilience of companies in the long term. Coming from an investment perspective, there are actually two areas, okay, which talk about ESG here. The first one is actually the UN supported PRI, the Principles of Responsible Investment. And this has actually been in existence since 2006, actually a good 10 years before the UN Sustainable Development Goals. Okay, so this was actually established much, much earlier. And within the industry, where we have the investment professionals under the CFA Institute, this is so becoming increasingly integrated and how ESG factors affect a company with broader perspective on the risks and investment opportunities of a company's securities. So really ESG measures how companies manage sustainability, social impact, and governance accountability. And these factors are critical for assessing the relevance and resilience of long-term investing. Okay? These companies that follow and abide by ESG guidelines and look for the long term are definitely viable long-term investments. Okay, so when you look at climate change and resource efficiency, the key thing I think we have is the climate change risk. We have already seen extreme weather, okay, which we frequently see here in our much, much heavier rain in Malaysia, the flash floods which occur, and even the non-flash floods, the more regular flooding we have here. And this itself actually creates a lot of regulatory changes, how we mitigate this, how we ensure that companies that are in our industry and even our consumers behave in a manner that actually protect the environment. So we have seen a lot of shifting consumer demands, and we've also seen population migration. Okay, and some of these might even happen more so in the future. So there's also proactive environmental strategies, which is important. How do we reduce our carbon footprint? How do we make sure that our energy is utilized efficiency? And again, renewable investments, okay, are gaining better recognition and can give a lot of companies a competitive advantage. We also need to optimize the usage of our existing resources, i.e. water, for example, which we have ample of in Malaysia, but we don't actually treasure it compared to many other countries. We need to reduce our waste, and ultimately we need to focus on a circular economy. And really, okay, from a strategic perspective, the environmental focus, okay, on a strategic basis is critical for investor trust in the long term. And of course, you also then ensure that you're in compliance or ahead of the regulatory landscape. And it also creates brand loyalty among customers and your very key people that is in your ecosystem, from your suppliers to your customers, and all your various stakeholders. Social factors. Social factors have actually evolved tremendously over the years as well. Okay, so today we have a lot of employee engagement. We also have diversity, so we tend to have inclusive practices, and a lot of things have happened on the workplace safety and fair practices. So in Malaysia, for example, we have OSHA. So every company with a certain minimum number of staff have to abide by the OSHA regulations to make sure that we all work in a safe environment. There's also the community engagement and trust. Okay, so now companies are actually required, okay, to actually build trust and social goodwill by engaging the local communities and support local social development. This is especially true in Malaysia, especially when we have indigenous population, which in decades ago, when we were actually clearing our forests, there were challenges there, but today all these have to be taken into account. And of course, from a consumer perspective, okay, a lot of consumers globally are looking for ethical product responsibility. Basically, they want products that meet ethical standards that not only protects consumers itself, but also the very community where these products are produced. And with these two being abided by and followed by, it actually strengthens a company's reputation. We also have the social performance and investment. So investors generally favor companies with strong social responsibility for long-term stability and reduced risk. Okay? Because these companies that are here for a long term, people will trust them, people will support them, and investors therefore will see the benefits of this when they invest in these companies. Now, governance has taken a very important role of late, and is effective governance actually vital for accountability, transparency, and ethical decision making. Okay? So we need boards which are diverse and independent to provide the right oversight. Okay? Because I said the stakeholders are no longer just shareholders; they involve the whole community and the ecosystem. Okay, everyone and everything that's in the ecosystem. Okay, even the environment and all the livestock, the animals around you are part of the ecosystem, and therefore enhances strategic guidance. And this actually creates, you have a transparency and trust in terms of the numbers, your ESG disclosures. Okay, so therefore you can build your shareholder trust and create a long-term following for the company. And you must have an ethical governance focus, okay, to align your corporate goals with long-term sustainability. So really, rather than focus on short-term profits, it's about looking for the long term. Okay, we can have more costs in the short term, all right, and as long as it aligns the long-term benefits of society and you create value in that your company. So as a sustainable growth driver, okay, it really drives sustainable growth because it aligns business strategies with long-term society and environmental goals. Okay, and that is critical. And ESG-focused companies actually manage risks like climate change, diversity, and governance expectations proactively. So they actually increase their resilience to external shocks, i.e. sudden regulations or sudden event risks, okay, that happen. So here, when companies already practice this, they build up the experience and capabilities of being able to attend to all ESG matters proactively. There's also the innovation and market opportunity side. So it actually encourages new developments such as clean technology, which can also open new markets and new revenue streams. My best example in a global scale of things is how Tesla came about. Okay, the first EV car manufacturer in the world, which is one of the Magnificent Seven today. And then of course you get investor recognition. Okay, over the longer term, and to capitalize on trends like renewable energy, new sectors open up, ethical consumerism. So this is where investors will start looking at opportunities, okay, for investments. So really, the benefits and strategic benefits of ESG, there's really long-term value creation. When we look at long-term now for value creation for company, it extends, not only 10 years for a financial case, but really 20, 30, 50 years, okay? It goes multi-generation because it creates lasting value for all stakeholders. And this definitely enhances financial performance because for companies which actually abide by ESG and follow it closely and proactive, in the longer term, it definitely reduces capital costs. It also creates, more importantly, efficiency and brand reputation. And you can really attract a group of loyal investors who are concerned about ESG matters and would like to build a better future for the world. There's also a competitive advantage because you get to, as I mentioned earlier, anticipate regulations and be proactive, okay, in addressing all the new changes or even sudden changes. So you can avoid liabilities and maintain your market competitiveness. Now, there is some uh, things about navigating the data quality and greenwashing risk. So there are challenges of ESG data quality because there's a lack of standardized ESG matrices, and it can cause some inconsistent data and difficulty comparing company performance, especially across geographies. And then, of course, because ESG is the real theme these days, many companies have actually been accused of greenwashing. Okay? So these efforts actually undermine the trust of investors, and people get more skeptical. And of course, then, because of this, we need regulatory and industrial bodies to develop uniform disclosure standards. And of course, to verify the mechanisms for ESG data, basically to check whether what companies are doing is correct. So unlocking value through ESG investing, basically here in Malaysia itself, we look to actually support our net zero 2050 target. So this by 2050, and we're looking at a 45% carbon intensity reduction. We're looking to enhance risk management and resilience. So we mitigate climate, environmental, and supply chain risks. We like to strengthen governance and reduce risk of scandals. We like to build resilience to market regulations and shifts. And of course, definitely with every investing point of view, capture growth opportunities. So we're looking at renewable energy. Okay, we are targeting 70% renewable energy capacity by 2050. Okay, we're also looking at a trade advantage that we have because ESG firms gain access to markets, okay, with strict sustainability rules. Globally, Europe has one of the higher standards for environmental requirements. So when we meet those standards, we are able to export or sell to their markets easier. And of course, then there's a group and many, many more are increasingly looking for and choosing ESG aligned companies. Okay, they want to be responsible investors, responsible consumers. Then there's also the innovation and competitiveness because it drives adoption of newer technology, cleaner tech, various digital solutions, and even circular economy models. So through ESG investing, there's actually some opportunities. Locally in Malaysia, there's the FTSE4Good Bursa Malaysia Index. And this has actually done well within a 5-year period. It's generally resilient across market cycles. And then, of course, it also enhances investors' returns. So over the past 5 years until end September, you can see the various numbers there. The FPM KLCI delivered, close to 26% return, at 100 about there. But the FTSE4Good Bursa Malaysia Index actually delivered a 36% return. So there is recognition for companies which actually can deliver on the ESG front. So the road ahead is basically that ESG investing is a major, major shift in capital markets, okay? Because historically, when we just look at pure capital markets of risk and return, now there's also the additional overlay of ESG, okay? Because it's sometimes very difficult to put an exact value to it in the short term, because you cannot actually put a dollar value to the present value of a company that abides or follows ESG or is a leader in ESG today. So therefore, the companies that actually do well in ESG today are actually better positioned to be around long term and to actually create value in the longer term. So future ESG investing actually requires more transparency and improved data quality. And really, technologies like AI and blockchain does improve ESG reporting and verification. And ESG investing ultimately aligns financial returns with social impact, fostering long-term sustainable growth and value for stakeholders. The landscape, the trends, challenges, opportunities, exploring sustainable investment growth and key market factors. Now, so the overview of the Malaysian landscape is that, okay, now ESG investing has shifted to mainstream financial strategies, okay, and it was actually influenced by global trends and local regulations. So it started with global trends first, mainly driven by the United Nations Sustainable Development Goals. So because of that as well, Malaysia, we are aiming for this under the COP initiatives. We're looking for carbon neutrality by 2050 and a 45% emission intensity reduction by 2030, guided by national plans. And we have various policies to achieve enable us to reach that goal, including the National Energy Transition Roadmap, okay, which promotes renewable energy and low carbon initiatives. And of course, the ESG practices enhance investor confidence. So we also have a lot of various green financing access and brand reputation for those that are abiding by it and focusing on it in Malaysia. So really, when we talk about the actual numbers and hard dollars and cents, okay, on a global basis, actually, total global basis, about close to 4 trillion US dollars in mid 2025 in sustainable funds AUM. This was up slightly more than 10% from this 6 months ago in December 2024. In Malaysia itself, we have our SRI funds, our Sustainable Responsible Investment Funds, AUM of 14.4 billion ringgit as of end June, and it has a CAGR of 7% and compounded annual growth rate of 7%. And of course, under our Malaysian government, we have target net zero emissions by 2050. And the various initiatives that are stated here include like the Green Technology Financing Scheme, we're looking at Green Electricity Tariff, Low Carbon Cities Framework, and Green Investment Tax Allowance. Now, I'm from AmInvest, and really as a firm at AmInvest, we have been leading the SRI space. We're actually the first in Malaysia to launch an SRI fund. That was back in 2018. And we have a 4.31 billion in SRI AUM today, with a 28.2% market share in Malaysia for SRI AUM. And currently, we have 9 SRI qualified funds across diverse asset classes. Across the more broader investment opportunities, okay, that's the renewable energy and green infrastructure side, whereby you're looking at 70% renewable energy capacity mix by 2050. So there are a lot of investment opportunities there, of which we also look at as a fund house. We're looking at green mobility and sustainable logistics. So we look at growth on the EV side, charging stations, even logistics hubs, for example, the big DHL, FedEx hubs that are here. So these are all getting green and sustainable, okay, or having net zero efforts. We're also looking at ultimately it will be a circular economy. Along the way, we also must have proper waste management and green technology. So we need to expand our recycling, waste to energy, sustainable packaging, resource recovery, and of course, looking for proper solutions for efficiency throughout. And all these create investment opportunities. So under our national sustainability reporting frameworks, we generally, under the Malaysian NSRF, we have adopted or mandates adoption of the ISSB standards to ensure consistency with ESG reporting. So the ISSB standards covers the International Financial Reporting Standards S1 and S2, okay, which covers general sustainability disclosures. And S2 actually illustrates and emphasizes on climate-related risks and opportunities. As always, we cannot do it at one big boom, so there's always a phased implementation. So they require the large sister company to comply from this year, actually. They started already 2 billion market cap and above ringgit. And of course, the others from 2026 and 2027 respectively. It's actually a phased rollout in terms of the reporting, including Scope 1, Scope 2, and Scope 3 emissions. So there's also Bursa Malaysia incorporates the TCFD recommendations to strengthen climate risk governance and investor transparency. Okay. So the TCFD is the task force on climate-related financial disclosures. Okay. So all this actually is aligned with how we do our reporting. And it came from a global set of standards which we have increasingly adopted locally as well. So the current trends and government initiatives. So in our budget 2025, they actually introduce a carbon tax. We have the carbon capture, utilization, and storage initiatives, and rebates for any energy efficient products to boost sustainability. We also look at renewable energy and mobility. Okay, so expansion of net energy metering, low carbon mobility blueprint, green finance growth under the various initiatives by our regulators like Bank Negara and Securities Commission. We are targeting green bonds, and of course within the financial system, we're looking at ESG linked loans. Okay, as we lead in Islamic sustainable finance, as well as social impact sukuk. There's also very sector-specific initiatives. For example, in the aviation industry, globally, they're looking for net zero by 2050. And of course, more local or within the Southeast Asian space, we are looking at CPO compliance with EU deforestation rules to enhance competitiveness and to make sure that our products are actually able to have a premium and be able to be sold in the EU. There are always challenges, as always, in this space. Firstly, of course, there's always the ESG awareness gap. The bulk of our economy is still run by SMEs, okay, the vast majority of it. And really, when you talk about the ESG concepts and practices, so while a lot more companies are aware of the concepts, when it comes to practices and reporting, there's actually quite a gap, and this gap needs to be filled, education. And to date, it's being done mainly because the larger companies in the world, like the multinationals, require their entire supply chain to report, especially with like scope 2 emissions, for example. So therefore, all the SMEs have to start abiding by it. So that's where it comes in, but it's driven by the larger companies. So really, the smaller companies need some assistance. There's still resource constraints, as always, as if every commercial enterprise, resources are limited. So the larger companies can have a dedicated ESG team, but the smaller ones, the one person, has to wear many hats. Okay, so in many cases, I've seen the CFO also leading, okay, the ESG initiatives of a company. And of course, there's a lot of reporting complexities. So especially for those companies that are exporters and they export to the developed markets, then they need to make sure that they abide by the various standards, be it the European standards or other developed market standards, especially, for example, even Australia. And there's, of course, the data and assurance issues. So really nowadays, you not only need to say you're doing it, you need to have independent assurances. So on the audit sides or the annual audits, okay, ESG audits is also becoming a norm these days, and they want to make sure that it's done consistently and accurately as much as they can, and it must be independently verified. So all this actually create a new opportunities as well for the various parties. For those who can do it right, you'll find that they have a sustainable advantage in the longer term. And the whole world is actually heading towards this direction. So it's inevitable in due course. So how does it ultimately talk about financial performance? Okay. So as you've seen in the chart earlier, the 5-year, the FTSE4Good Malaysia Index did deliver higher performance. And generally speaking, ESG has generally developed alpha, okay, positive alpha over the 3 years, rather significantly. Increasingly, more and more investors have a preference for ESG transparency, and they want companies that are moving towards, they are already either very ESG compliant or have a clear roadmap towards that, okay, especially for being net carbon neutral or zero emissions, net target zero emissions. It's because that, we are living in a world with limited resources, and with climate change, we are having huge impact. The ones that are sustainable are the ones that will actually thrive in the longer term. It really becomes a competitive advantage, okay? And because of this, many companies are seeing that it's actually shifting from being just a cost issue where I have to spend money on, that also becomes a financial opportunity that, investors actually start assigning a premium to companies which are at the forefront of ESG. So really, on the local side, we have our green technology financing. 4.0 offers about 100 million ringgit financing with government guarantees and interest rebates for green projects. tax incentive and rebate. So our budget 2025 provided a few tax incentive, including our EV vehicle support here. So for those who are keen on buying an EV vehicle, please go and do it quickly. Okay. There's also the digital ESG platforms, so they're available. So you can use AI and blockchain to improve accuracy and transparency. And of course, then the whole government through a country's initiative, they are actually inclusive ESG adoption guides. Okay, so like Bursa Malaysia's SEDG helps SME adopt ESG practices effectively. So really, at the end of the day, like I said, it does attract investments. So really, both at the existing company level and for new opportunities. So as always, when we have clear targets, like what Malaysia has for its carbon neutrality for 2050, it actually allows companies and new companies, existing companies to plan towards it, and also to raise financing and make the relevant investments accordingly. So really, when you also have ESG transparency, when you need third-party assurances like the ESG audits that are going on, okay, it really does also enhance that, not only are companies saying, they can just, some people say that to avoid greenwashing or the talk is cheap. Now you can independent verification that the companies are actually really doing what they're saying because that's independent verification. And of course, there'll be significant green-related investments. By 2050, we estimate there'll be about 1.2 trillion of such investments. And ultimately, even for FDI, when the MNCs invest, especially those from Europe, because they have to abide by their relevant countries and headquarters requirements, okay? So when they see the country also moving in that direction, it's easier to justify their investments to build their factories here so that they know that their entire supply chain and the ecosystem is also aligned to it. So this is where we need to make sure that we are all constantly ahead and we provide the right framework and regulations and laws for the ESG for ESG investments and also opportunities and requirements. Okay. So the key takeaways is that basically it is an evolving ESG landscape. So really things continue to change and it's very dynamic. And there are always the various challenges that are there, and things have to evolve to be updated to be relevant. Okay, and we have to make all this our strategic priority. Okay, not only at the national level, at the government level, but it extends all the way down to industries, sectors, and companies. Okay, and we need to make sure that everyone has the right framework, or even the framework and regulations are not very clear, the companies that operate within it should have a direction of where it wants to head. And it's imperative, okay, because ESG boosts financial performance. And it's very essential for your long-term business resilience and competitiveness. So companies have to plan, okay, to factor in all ESG elements, including the flexibility and and to be able to be creative and innovative for the various changes that are coming about. So now it's about the FTSE4Good Bursa Malaysia Index itself. So really it's about the understanding of ESG principles, which I think I've described long enough. And the FTSE4Good is actually, the FTSE is a global provider, and the FTSE4Good index actually encourages companies to adopt transparent, measurable, and ESG practices for better sustainability. So the FTSE then has got this requirements and criteria. And in Malaysia, for the Bursa Malaysia Index, they actually benchmarks Malaysian public listed companies that meet those standards and promotes responsible investments. Right? So what did they do? Okay, the constituents are selected from the FTSE Bursa Malaysia Emas Index, and it covers 98% of our market cap. And basically, they have a scoring criteria, and the assessment actually covers 14 ESG teams, okay, which are aligned with the various like the TCFD, TPI, and UN SDG standards. And ultimately, all these companies that are going to be in the FTSE4Good index must score at least a 2.9 out of 5 of the ESG scale measured on the FTSE Russell's methodology. So it uses public data, and ultimately it excludes controversial sectors immediately, ensuring transparency. So they tend to use the annual reports as well as whatever public data that's available. And it goes through a filter, which is very transparent. All the criteria is actually publicly stated on the FTSE Russell's site. And then they actually put a measurement on it for each of these categories. And overall, for a company to be included in index, they must score 2.9 out of 5. And of course, as companies evolve, okay, they also need to be reviewed. So really, this is actually reviewed twice yearly. So the FTSE Russell Group reviews this index twice yearly to ensure that the index and the numbers are updated. And those companies that are actually do better or meet the 2.9 or better are added in. And for those, if there are those who actually drop below 2.9, they're excluded. Okay. So market impact. Generally speaking, we have seen that stock prices react positively to FTSE4Good index inclusions and decline upon exclusions. So it really does reflect investor sensitivity. We also seen the broad index performance earlier. And of course, the higher ESG scores also correlate with stronger valuation matrices. So like Tobin's Q is again one of those financial matrices which measures a company's value compared to its replacement cost of its assets. So if the Tobin skill is much higher, it means that people are willing to pay a higher value for the replacement cost of your assets today, which means you're doing something very correct with your assets today that will enhance the value in the future. Of course, then when you also have the ESG reporting to get for the FTSE Russell to measure you, you must have a clear reporting, which is also independently verified. Okay? And then there's also, of course, the role of ESG integration for long-term value creation. So there is an imperative for Bursa-listed companies to align with ESG criteria. So basically, those who are really listed on Bursa, of course, you want to have a criteria of 2.9 and above, a score of 2.9 above to be able to qualify for the index. And when you also have that, part of the requirements is also to strengthen governance. So not only must you have governance to do the right things and be ethical, you must also embed the ESG considerations into your board discussions. And of course, then you also need to enhance your disclosures to make sure you report accordingly, transparently, as well as also have it independently verifiable. Okay. So what we have here, the FTSE4Good ETF. Okay, so the investors here can just invest in a FTSE4Good Malaysian ETF. And this ETF actually invests in a portfolio of stocks. And you get exposure to a portfolio of stocks which are, are high on the ESG rankings, okay, for a very, very small ringgit amount. Okay? So really, the fund itself, okay, is the first SRI qualified ETF in Malaysia. Okay, at AmInvest, like I said, we were the first. We also provided the first SRI qualified fund. So today, we also provided the first SRI qualified ETF based on a very transparent criteria. Using the FTSE Russell criteria, and of course, within the ETF itself is diversification. Okay, so just to buying one ETF on Bursa, you actually get exposure to over 100 stocks. Okay. It's very flexible and liquid, so it's actually listed on Bursa, so it's like tradable. So you can buy and redeem at market price during Bursa trading hours. Low minimum investment, only 100 units. So similar like trading a stock on Bursa, it's only 100 units. And of course, there's no entry fee compared to a traditional fund. Okay. And today, it's trading at our FTSE4Good Bursa ETF is at 173. So really, at 173 ringgit, the exposure, a broad-based exposure to the FTSE4Good ETF, okay, to an ESG fund in the market. So again, performance metrics done well over the past 5 years. I can clear out performance here. Okay, 36%, a good 10% over 5 years, okay, versus the broader versus the FPM 100 and the FPM KLCI. So I said it provides comparative returns. Okay, so it definitely matched the index, actually slightly outperformed. And then the volatility and drawdowns are also better. Okay, it shows resilience during market fluctuations. And of course, the performance trends confirms that ESG integration actually does not hinder profitability, but support supports, okay, sustainable investment viability, and the market does reward, okay, the companies that are better in their ESG deliverables. So basically, ESG investing is a key pathway for sustainable growth and long-term value creation. And we hope that you manage to look at the landscape and understand the role of the FTSE4Good as an enabler for leading Malaysian companies in ESG practices. And then the usual disclaimers. Okay, Shane, shall I pass it back to you?
Yes, thanks, Mr. Teh, for sharing with us about how do we do ESG investing through ETF. And now we have an options for us to explore ESG investing through ETF. Of course, for sharing with us, the essential aspect of ESG investing. Today, the session is pretty info-packed and also quite knowledgeable, right? I learned a great deal myself. Yes, if any question to ask our speaker, please write your question in the Q&A box, yeah? We will do our best to address your questions. Now, the first question I see on my screen is that, is this a new ETF? Like, when was it listed and what is the current AUM right now?
Okay. The short answer is that it is new in that we actually had a previous ETF. It was actually a FBM KLCI ETF, and we actually converted it to the FTSE4Good Bursa Malaysia Index ETF. Right? So we actually converted a existing ETF we had to this one. Right? So in this sense, this new ETF or the converted ETF has been in existence just for about just about 2 months plus now after the conversion. AUM is actually single digit millions, 5+ million. But in this case, our tell investors actually don't worry about it, because if really there's a huge surge of inflows that people want to buy, okay, we will actually provide the liquidity for it as a group. So if the money comes in, we'll take the money and invest in all the stocks. So we can happily always increase the AUM very easily as well. But today is still at about 5+ million ringgit.
Okay, 5 million for AUM. So can you that's pretty interesting for the conversion, right? Can you enlighten us, like how did the conversion happen? Like what happened to the old unit holders, and did they got exited, or just the fund got renamed and the constituent stocks got replaced?
Okay, basically, the short answer is that it's always the so we have to go through all the requirements through SC and Bursa and have the relevant approval sought to convert it. But remember, it came from an FBM KLCI index, so we already had the big market index components there, and we broadened it out actually to include the ESG element. So we actually added stocks to it, and we focus on the ESG stocks. So there are two elements here. One is getting the relevant approvals, which is all cleared. And then after that, when we look at the broader universe of it, then we actually allocated the investments, okay, to all these ESG stocks. Because the ESG, the FTSE4Good Bursa Malaysia Index has got more stocks than the FBM KLCI.
So the existing unit holders are still the holders of the funds, right? Unless they choose to exit themselves, all right?
Yes, correct. Because the ETF, and to be fair, because we gave, frankly, there was ample notice. So, and I said it's tradable on Bursa, so they can just sell anytime they wanted to. Literally on any stockbroking platform.
Okay. Yeah, so when there's when the conversion happened, the correct NAV didn't change much lah. Am I
No,
right?
didn't change much. Correct. Yes.
I see. Oh, okay. Oh, it's the first time I hear about conversion. So it's
Well,
new knowledge for me.
as I said, we have to be in time. We have to proceed and progress with the time
Mm.
as well. So really, it's like
Okay.
it's
To stay
it's what I call
relevant,
progress lah.
yeah, to stay relevant to the current investment theme, right?
Mhm.
So the next question from Citarum, is that what will be the estimated yearly dividend payout for this ETF?
Okay. That's it, because it follows the broad index as well. Our Malaysia is actually a reasonably significant dividend yielding market, about 4%. So we are still looking at that level, the mid single digit levels in terms of the payout for this ETF.
Okay, so
Mm.
when this ETF pays out dividend, does it result in an increment in NAV, or is involve receiving the cash payout?
Okay. It's really it's really a cash payout per se usually.
Okay, so
Because
directly.
it's listed, so it's like it's like a stock. So like you see the unit hold, you see we have the list of shareholders or unit holders. Because I say it's listed, and there will be a payout
So you go into
mostly.
the CDS, so go to the trust account, right? The stockbroking trust account.
Uh, Well, stockbroking trust account, depending on how you open your stockbroking account. For those who are direct individual accounts, now you can
Mm.
state your bank account number, just like when you receive your Maybank dividend, for example. You can go direct to your bank account these days, depending on how
Mm.
you structure the account.
All right. Okay, so at this current AUM level, how does is it still sustainable for AmFunds?
Uh, Frankly, yes, it's sustainable for AmFunds because, as I said, it's a very low costing because we get the whole index composition and we just need to execute seamlessly because uh, there's no active decision making on our side in a sense. Because like I said, this ETF is more passively driven. So it's really quite efficient to just do it. Because once we see the change in index every half a year, we just need to adjust it and just send one order in for the whole portfolio and it adjusts by itself. So it's actually quite efficiently done.
I
Generally
see.
speaking, for equity ETFs or funds, you don't need a lot to be efficient. As long as you hit in the low single digit millions, it's really quite okay, especially for the passive ones.
Ah,
Of course, you go to multi-billion, it gets much lower. But really, when I talk about equity market type returns, traditionally, over time, the longer, because equity returns are supposed to be the highest among the traditional classes. So if it does go to that high single digit returns that we look for traditionally in history, to even in certain growth markets of low teens, um, the returns will more than offset the fees usually.
okay, so
Mm,
what's expense ratio at the moment?
Sorry. We charge a 0.5% management fee. So the expense ratio is just actually slightly above that, about
Okay, it's above
0.6
0.5,
plus.
but I think will be below 1, right?
Yes, below one, definitely below one.
All right. So the next question I have on my screen is, what are the key benefits for investor to choose this ESG ETF compared to other non-ESG ETF?
Okay.
Mm.
Okay, the short answer is that when you talk about ESG, like I said, increasingly it is becoming a norm. Okay, so really as people are in many portfolios in the world, people are excluding companies which are not ESG friendly. So we have even seen, like for example, the Norwegian sovereign wealth fund exit oil and gas companies, okay, energy companies. So the irony of it is that the Norges fund was actually developed because of North Sea oil. Okay, so they got their money from drilling oil, and now they're saying that I'm not going to invest in energy. So really, that's the trend going forward, that people are very concerned about climate change, especially on the environment side. So like coal companies, for example, are really excluded entirely from many sovereign portfolios today, including as well as private portfolios. And you can see more and more of that happening, where people are looking at things like, for example, when we see issues about labor, unfair treatment of labor. Best example being the Apple supply chain, where there's a lot of publicity on Foxconn, in the years before. Then a lot of investors even in the global space would not and exited Foxconn, for example. So really on the whole ESG space, people are increasingly looking for, doing the correct thing that is good for the environment, advised by the social requirements, and it's good governance. So really it becomes the trend and it becomes the norm. At the end of the day, the way I'll say is that it's the correct thing to do. That's why the whole world's moving that way. And when you do the correct thing, okay, the market will eventually reward you for it. So the short
Right.
answer is that it is from, I would dare say from about pre-COVID, I would say from about 10 years ago, it was already a good time to start going to ESG. We could see it already on the Europe side when they were questioning about how sustainable our CPO was.
Okay.
And that's why our CPO companies in Malaysia took a head start for the RS, the responsible CPO table to make it viable for the European market. So yes, it is there and it will continue to be there and
Mm.
it will continue to benefit investors.
So the follow-up question is it a good time to enter this ETF right now?
Okay. If you consider on a relative basis, the answer is I would say always good to have an ESG versus a non-ESG. If the broader question is it a good time to buy stocks? Then I'm not. Is that the question or not?
Mm.
But yes, it's always a better time to buy ESG versus non-ESG. Increasingly, because the criteria I said, even from the recycle, it's now become 5 Rs. So it always becomes more and more, shall I say, detailed, and therefore, it's the ESG stocks who are already there will continue to perform better than those who are not there or who are not up to mark.
Mm. So is the dividend distributed annually? So this is a question.
It's half yearly.
Half
Half yearly,
half yearly.
yes, because of the
Uh,
interim, yes, half yearly interim.
so does this ETF have market makers?
Oh yes, of course, of course. Within the group is within the M Bank group, so the market maker is actually M Investment Bank.
Okay.
Mhm.
So we should not worry too much about liquidity, right?
Yeah, correct. Okay. Sorry. It's M Bank Group. I believe it's the not M, it's M Bank. And I think it's M Bank itself. M Bank itself, not M Bank itself.
Or M-Bank lah, not
Yes, M
M.
Bank itself. Correct.
Right.
Yes.
Okay. Okay. The next question is how do you quantify governance risk in a family controlled company?
Okay. Firstly, I think under the Bursa requirements, we look at sort of like the number of independent directors. So that's actually a very interesting question and a very challenging question at times. So when we look at governance risk, it's so because we look at things firstly, the ratio of independent directors versus non-independent directors. So if we ever find a family-owned company with more independent directors, that means more than 50% independent directors, to me, it's a real plus. Okay. But as you know, most companies do not require to have majority independent directors, not required. So they don't. And therefore, then the question is, when you have majority of them are family members and non-independent, then how are those decisions made over time? Okay. And that's the only way to assess it is the track record of the companies. Okay. Especially when they're corporate exercises and activities. Okay. How have they been doing over time? And how have they been rewarding minorities? Okay. Because ultimately, if we see a company that's very cash generative and profitable, do they start distributing back the cash to investors, okay, including minorities and of course the share, or do they start retaining it and investing in various other projects which may not be very relevant to the business? So this is how we assess it. We need to look at the track record of the company. But ultimately, the first step is how many independent directors there are, and the higher proportion it is, the better it is. That's the first step. But if the family-owned company has majority of family or are non-independent directors on the board, then the question is we tend to look at the track record over time.
Yep. My view is that sometimes not all the independent directors are independent. They could be, you know,
That
friends or proxies of the majority shareholders, right? I don't know how they see this.
uh okay. That is uh qualitative assessment, which again is not I would say is not necessarily incorrect statement, but I said we have to take what the numbers state first. Okay, I mean
Okay.
the number is there. I mean there's a first cut first, right? There's a first cut first, right? So that we look at it this way. So that's why, in some of the larger companies and like in the regulators, they limit the number of years an independent director can be on the board. If you know, I mean, like in the
Like
various
maybe
somehow like
3 years,
back in
right?
the garage,
In
like
a
if
short
after
year.
X number of years, you are no longer deemed to be independent.
Uh, yeah.
So that's very good. So that's where we also look at how long the independent director has been on the board. That's where the next overlay comes as well. So there are
Mm,
various ways to do it. So very valid statement. But I
mm,
said we need to take what it is to as it is first, and then we also need to then look at, okay, how long has this independent director served? What's this independent director's track record as
mm.
well?
Okay.
Because you have some very independent directors who are very capable.
Yep. We really do.
Mm.
Um, let's
Oh,
do one last question because it's
yeah, yeah.
9:30 now. So the question here is, so is this ESG ETF undervalued at the
Okay.
moment?
That's a very interesting question. Okay. Normally, when we have this such ETFs, because it is invested in a basket of stocks, and we do not want arbitrage. Okay, because then people can just replicate the basket and short the ETF or long the ETF and short the stocks. So really, the ETF is generally within the fair value based on the share prices of the underlying. Okay, that's usually the case. Okay, so really, it's not really relative to the stocks it holds. It is not undervalued or overvalued usually. Now, the bigger question I think people ask then is that, so is our stock market undervalued, generally speaking? Okay, I'd like to say that if you look across the entire world, many markets have reached all-time highs. Okay, so we have seen, US, both S&P, Nasdaq, all-time highs. Even the low-risk markets, okay, like our boring neighbor down south, STI all-time high, Australia all-time high. So what we have been seeing is that, and we've seen rotational play, and we believe Malaysia will have its day soon.
Okay.
Because Malaysia is nowhere near all-time high,
Mm,
about -1 standard deviation to its PE ratio, 10-year mean PE. We have seen that rotational play happen in other markets. If I can go to a regional market, we saw how China A share market only outperformed in the later part of this year.
okay. Now with Malaysian ringgit strengthening right now, I guess, it could be a possibility that the Malaysian equities market may, revert back to its rightful value.
We have like I said, sometimes locally here, and because of all the noise locally we face, okay. As I said, sometimes we are our worst detractors. We don't understand how good we have things here, okay. I mean, we watch in the news about the issues in Indonesia, for example, okay, that caused the finance that during a period where the finance minister got sacked or got removed, the riots on the streets, we don't really appreciate what we have here sometimes. That's it.
All right.
Okay.
So that should conclude our Q&A session today with Mr. Teh. Thank you so much to Mr. Teh for sharing with us about the ESG aspect of investing and how do we gain a diversified exposure through the exchange traded fund. All right. So ladies and gentlemen, you just listened to the head of investment and research from AmFunds Management Berhad, Mr. Teh Chi-cheun.
Okay. Thank you, Shane. Thank you, Bursa. Bye.